The money game is rigged, but there is a way out. Ever wondered why your money buys less every year? Why inflation keeps rising while your paycheck stays the same? Truth is, the financial system is broken and it's time to uncover the real reason behind it. Enter Bitcoin, the game changer in the evolution of money. To understand why it matters, we need to go back in time, from barter to gold or from fiat to Bitcoin. Isn't just a history, it's your financial future, and you will never look at money the same way again. This is Varun from SatsOverCents. Let's dive in. Do you ever wonder why life seems to get more expensive every year? Your salary stays the same, but your rent, groceries, gas prices keep climbing. Isn't just bad luck, it's a symptom of a broken monetary system. There is a revolutionary solution in the horizon: Bitcoin. To understand why Bitcoin matters, we need to explore the history of money and the problems with our current system. Let's take a journey through time to see how we got here and why Bitcoin might be the future of finance. Imagine you're a farmer in ancient times. You have grown more wheat than you need, and you want a new pair of shoes. The problem? You need to find a shoemaker who not only makes great shoes but also wants your wheat. This is the barter system, direct exchange of goods and services. In ancient Mesopotamia, a farmer might have 10 bushels of wheat for a goat. But what if the goat herder didn't need wheat at that moment? The barter system had significant limitations: lack of coincidence of wants, difficulty in storing value, and challenges in dividing goods. To solve these issues, society began using commodity money, items with intrinsic value that everyone agreed upon. Salt, shells, and eventually precious metal became popular. In ancient Rome, soldiers were sometimes paid in salt, which is where we get the word salary from, the Latin word salarium. Gold and silver emerged as the ideal forms of money due to their durability, divisibility, scarcity, and portability. As civilizations advanced, they standardized their currency systems. The gold standard emerged, where a country's currency was directly linked to a specific amount of gold. In 1900, the US officially adopted the gold standard, setting the price of gold at $21 per ounce. Benefits of the gold standard were stable exchange rates between countries, natural check on government spending, protect against inflation. However, it also had drawbacks: limited economic growth, deflation during economic downturns, and constraints on monetary policy. In 1971, President Nixon ended the gold standard, ushering in the era of fiat money, currency not backed by physical commodities but by government decree. Today, when you look at a $20 bill, it says Federal Reserve Note. It's valuable because the government says it is and people accept it. There are several problems with our current monetary system. To start with, inflation and loss of purchasing power. With fiat money, central banks can print currency at will, potentially leading to inflation. Since 2020, the US has printed over $6 trillion. This massive increase in money supply has contributed to rising prices across the board. In 2013, a Big Mac meal cost around $5. Today, it's over $10. A house which was worth $150,000 in 2000 might be valued at over $500,000 today. Banks and governments have significant power over the monetary system, which can lead to mismanagement or even corruption. In 2008, the US government bailed out major banks with taxpayer money, highlighting the interconnectedness of banks and government. Traditional banking systems often exclude the poor or those in developing countries. According to the World Bank, about 1.7 billion adults remains unbanked globally. International transfers can be slow and expensive due to multiple intermediaries. Sending $200 to families overseas cost an average of 6.8% in fees, according to the World Bank. Bitcoin, created in 2009 by an anonymous person or a group under the name Satoshi Nakamoto, offers potential solutions to these problems. To start with, limited supply. There will only ever be 21 million Bitcoin, protecting against inflation. If you had saved $1,000 in Bitcoin in 2013, it would be worth over $100,000 today, compared to the diminished purchasing power of $1,000 in cash. No single entity controls Bitcoin, reducing the risk of manipulation. During the 2013 financial crisis in Cyprus, the government froze bank accounts and imposed withdrawal limits. Bitcoin provided an alternative for people to store and transfer value. Similar thing happened in Canada during truckers' protest in 2020. Anyone with internet access can use Bitcoin, regardless of their banking status. In countries like Venezuela, where hyperinflation has devastated the local currency, people use Bitcoin to preserve their savings and conduct international transactions. Bitcoin enables faster and cheaper international transactions by eliminating intermediaries. Bitcoin is no longer a fringe idea, it's a growing financial movement. Every day, more individuals, businesses, and even governments recognize its potential to reshape the financial landscape. Let's explore how Bitcoin is actively revolutionizing money and what the future could hold. Bitcoin as digital gold. Gold has long been a safe haven asset, protecting wealth from inflation and economic instability. Bitcoin is often referred to as digital gold because it shares key properties. Scarcity, where we mentioned only 21 million Bitcoin will ever exist. Portability, unlike gold, Bitcoin can be transferred instantly across the globe. Divisibility, a single Bitcoin can be divided into 100 million Satoshis, making it accessible for transactions of any size. Institutional investors, including Tesla and MicroStrategy, have added Bitcoin to their balance sheets as a hedge against inflation. Bitcoin is also gaining traction as a means of exchange. While early critics argued that Bitcoin was too slow and expensive for everyday transactions, innovations like the Lightning Network have addressed these concerns. In El Salvador, Bitcoin is now a legal tender, allowing citizens to use it for daily transactions, from buying groceries to paying utility bills. Businesses like Starbucks and McDonald's in the country now accept Bitcoin. In traditional banking, the money in your bank account is never truly yours. Governments can freeze accounts, banks can impose withdrawal limits, and financial institutions can block transactions. Bitcoin empowers individuals to be their own bank, giving them complete control over their wealth. With a smartphone and internet connection, anyone can access Bitcoin, bypassing the need for traditional banking systems. In Africa, where banking infrastructure is limited, Bitcoin adoption is skyrocketing. People use Bitcoin to send remittance, avoid high fees, and protect their wealth from currency devaluation. Bitcoin adoption is growing across various sectors: retail, remittance, salaries, governments. They're all adopting Bitcoin. Despite its potential, Bitcoin still faces challenges: regulatory uncertainty, volatility, education. Many people still don't understand Bitcoin and how to use it securely. However, history shows that every major financial innovation faces resistance before mass adoption. The internet itself was once dismissed as a niche technology, yet today it is indispensable. To conclude, from barter to gold or from fiat to Bitcoin, the evolution of money has always been about improving efficiency, security, and freedom. Bitcoin isn't just another digital asset, it's a revolution in how we store and transfer value. As more people wake up to the problems of the fiat system, Bitcoin offers a decentralized, inflation-resistant alternative that empowers individuals worldwide. The next time you wonder why everything is getting more expensive, you need to ask yourself, are you saving in dollars or are you saving in Bitcoin? The choice is yours. Opt for a money that loses value over time or embrace the future with Bitcoin.